Good morning everyone. In this session we are going to see profit prior to incorporation. Myself Dr.A.Devi, Assistant Professor, Department of Commerce, KCS Kazinadar College of Arts and Science. Incorporation of company is nothing but approval. So for starting a company, the registration is mandatory and they must get a proper approval from the registrar of company. So in the present scenario, many non-corporate concerns wants to convert into a corporate company because of certain reasons, and they wants to enjoy certain benefits for which many non-corporate concerns wants to shift to a corporate concern. So the existing proprietary business, sole proprietor business or a partnership concerns may get converted into a limited company. Therefore, they decide to form a limited company to take over their business. But the formation of company requires lot of formalities and it is a time consuming also. So for which the business cannot be stopped, but at the same time the procedure for getting approval will also be taken place. So from the date of purchase of the business till the date of getting a proper approval, that is certificate of incorporation, the period is called a pre-incorporation period, and after the period, that is the period, the date on which the company gets a certificate of incorporation till the accounts year end is called a post-incorporation period. So in this chapter, we are going to see what is the profit earned by a company before its incorporation and after its incorporation for that particular year. That is the year in which the formation of a company has taken place. So the real meaning for profit prior to incorporation is the profit earned, and it is not required that the company must earn profit alone. They may suffer a loss or loss suffered during the period before incorporation, and it is a capital profit and it should not be distributed to shareholders of a company as a dividend because the company itself was not existent on the day of before its incorporation. So we are going to see how the profit is to be computed and how the profit is to be treated. Methods of accounting of P&L, profit or loss prior to incorporation. These are all the steps. Step 1. Preparation of trading account. A trading account should be prepared at first for the whole period. For the entire period, that is that during that particular year, there is a period called pre-incorporation and post-incorporation. But without minding that, we have to prepare a trading account. ஒரு காமன் ட்ரேடிங் அக்கௌண்ட் ப்ரிப்பேர் பண்ணணும். ப்ரீ இன்கார்பரேஷன் போஸ்ட் இன்கார்பரேஷன்லாம் ஸ்ப்ளிட் பண்ணாமல் அந்த பிஸ்னஸை பர்ச்சேஸ் பண்ண டேட்ல இருந்து அந்த அக்கௌண்ட்ஸ் இயர் முடிகிற டேட் வரைக்கும் ஒரு காமன் ட்ரேடிங் அக்கௌண்ட் ப்ரிப்பேர் பண்ண போகிறோம். அண்ட் வி நோ த ஃபார்மேட் ஆஃப் ட்ரேடிங் அக்கௌண்ட் like it starts with the opening stock and purchase, and from which the closing stock and the sales is to be deducted for getting the gross profit. Okay, and all the direct expenses, the expenses which are related to manufacturing the goods will also be considered in trading account. Yes. So after preparing a trading account, we will get in gross profit. And before preparing a P&L account, we have to calculate two important basic ratios. One is time ratio, the other one is sales ratio. If it is required, we have to find weighted or adjusted time ratio, weighted or adjusted sales ratio. And we have to decide the allocation of income and expenses, on what basis the incomes and expenses which is we are going to calculate in the P&L account is to be apportioned. P&L account prepare பண்றதுக்கு முன்னாடி important ratios prepare பண்ணிக்கணும். Time ratio, sales ratio. தேவைப்பட்டால் weighted time ratio, weighted sales ratio calculate பண்ணி வச்சுக்கணும். அதே மாதிரி எல்லா இன்கம்ஸையும் எக்ஸ்பென்சஸையும் எந்த பேசிஸ் ஆஃப் அப்போர்ஷன்மெண்ட்ல பிரிக்க போறோம் அப்படின்றதையும் டிசைட் பண்ணி வச்சுக்க போறோம். இதை பண்ண உடனே we are going to third step, we are going to prepare P&L account. But in the P&L account, it is not a common for the whole period. ஸோ இதில் நம்ம எப்படி ஸ்ப்ளிட் பண்ணிக்க போகிறோம் அப்படின்னா ப்ரீ-இன்கார்பரேஷன் பீரியட், போஸ்ட்-இன்கார்பரேஷன் பீரியடுக்கு தனித்தனியாக இன்கமையும் எக்ஸ்பென்சஸையும் ஸ்ப்ளிட் பண்ண போகிறோம். ஃபர்ஸ்ட் அதில் நம்ம என்ன பண்ணுவோம், கிராஸ் ப்ராஃபிட்டை ப்ராட் டவுன் பண்ணுவோம். அப்படி கிராஸ் ப்ராஃபிட்டை ப்ராட் டவுன் பண்ணும்போது அதை சேல்ஸ் ரேஷியோவில் பிரிக்கணும். அடுத்தது நமக்கு இன்கம் சைடில் வந்து கிரெடிட் சைடில் we will put all incomes, and here we are going to follow the new method. So all the notes is to be prepared for income and expenditure columns. So income பொறுத்த வரைக்கும் எதெல்லாம் இன்கமோ அது எல்லாத்தையும் ஒரு நோட் ப்ரிப்பேர் பண்ணி we are going to compute. So gross profit is the first item on the revenue. gross profit சேல்ஸ் ரேஷியோவில் பிரிக்க போகிறோம். அண்ட் மற்ற இன்கம்ஸ் எல்லாம் பார்க்க போகிறோம். அந்த மற்ற இன்கம்ஸ் எல்லாம் if it is a fixed income, then we are going to split it in the using a time ratio. And if it is variable incomes or expenses, then it is to be allocated on the basis of sales ratio, because the sales, if the sales is being varied for the pre-incorporation period and the sales post-incorporation period, then the expenses and the income is to be allocated on the basis of sales ratio. And certain expenses which are purely related to pre-incorporation period. Example, if it is a partnership business converted into a corporate company, then a salary was given to the partner is obviously being the period of pre-incorporation. And after it turns into a company, the directors was appointed, and any salary given for the company directors, then that remuneration will go for an post-incorporation period. So likewise, so these are all the three steps. By completing the P&L account, we will get a net result, that is of net profit earned by a concern. So on the net profit mean நம்ம ரெண்டு காலமா வச்சிருக்கனால we can easily find out the pre-incorporation profit and the post-incorporation profit separately. Yes, let me see the format for computing the profit of pre and post incorporation. So this is a P&L account format, and we know from income the expenses have to be deducted to find the profit. So revenue from operation is an income, and this will be treated as A, for which we have to prepare a note called note number 1. And expenses, based on its nature, it is being classified into different heads, like employee benefit expenses, that for which we are going to prepare a note number 2. And finance cost is going to be note number 3, and depreciation and amortization expenses will be in note number 4, and all other expenses which is not falls under these 3 heads will go for other expenses head, that is of note number 5. So adding all these expenses, it will be of total expenses. These total expenses is to be deducted from revenue to find a profit. And as we provide a column separately for pre and post incorporation, automatically we will get a profit for related to pre and post incorporation period separately. Yes. Note number 1, revenue from operation. As I said, gross profit will be the first revenue under note number 1. Gross profit is to be apportioned on the basis of sales ratio. If it is given in the question, we can make use of that sales ratio. If it is not given, then we have to find the sales ratio, and that ratio is to be applied. If it is any bad debts realized, then it is the debts related for the earlier business. Hence, it is an income related to pre-incorporation period. Then note number 2, employee benefit expenses, and whatever be the benefit given for the employees in the form of salary or commission or etc. will go for this employee benefit expenses head, that is note number 2. If it is a salary of an employees, automatically we have to split it in time ratio, because it will be a fixed monthly salary or a weekly salary. The employees, if the number of employees are not varied, we can use the time ratio. If the number of employees are varied before incorporation and after incorporation, then we have to find weighted time ratio. And company secretary, the secretary will be appointed only for the companies, and hence this is the expenses related to post incorporation. and any manager salary like partner salary will be related to pre-incorporation period. Then finance cost, any cost related to arrangements of finance like interest on debenture, interest on loan. So see that interest on debenture, only a company can issue a debenture, and hence the interest on debenture related to post-incorporation period. Otherwise, if it is a common interest taken for running a business from a bank, then that can be apportioned on the basis of time ratio. And if it is any interest paid to the earlier business partner or a sole proprietor, then like a vendor, it will go for an actual. Like if it has happened in the pre-incorporation period, then it will be for pre, or if it has happened in the post-incorporation, it will go for post. Then depreciation and amortization expenses, depreciation will be apportioned on the basis of time ratio, and goodwill written off will be in the post-incorporation period. Note number 5, see all the administrative selling expenses, and if it is fixed in nature, then we have to split it using the time ratio. And if it is any selling and distribution expenses, and that will vary according to the level of sales, and hence it is to be distributed on the basis of sales ratio. அதே மாதிரி pre-incorporation period குரிய expenses இருந்ததுன்னா pre-incorporation period மட்டும் போட போறோம். And like director remuneration and any donation given by a company or preliminary expenses written off, all these will go for a post-incorporation period. So prepare all these 5 notes, and finally the total of each notes will be put it in this format, that is the statement showing profit period and post-incorporation. Then do all calculations. Total expenses is to be deducted from revenues, then we will get a profit. And the profit which is in the column of pre-incorporation will be called as profit earned prior to incorporation. Yes. So this is how we are going to solve and find the profit earned by a company during its pre-incorporation period. Thank you for listening. Thank you.